Fred, let me give you some background. The name of this group is StartUppaMi. Almost exactly a year ago, we had our first meeting, 20 guys in Marco's garage. You can't see Marco, but he'll be handling...
No women?
I think there were 2, I think.
All right, 20 guys and 2 women. We'll have to change that ratio.
That's the normal ratio, yeah? And yeah. And now, like a year later, we're here in this fantastic room. By the way, we'd like to thank the Milan Chamber of Commerce.
Wow. Hey, everybody. That's some room.
Okay, so I want to do a really brief introduction. So basically, a year ago, 20 people, now about 150 people in the room. And Italian startups, you know, there's a lot of interest in startups, but the investment community hasn't really kept pace, okay? So we're still very much involved with business plans and revenue models before even thinking about a seed investment, okay? And so it would be really great if you could just talk a little bit how things happen in the States and how, you know, seed investment happens in the States, and more lessons we can learn in Italy. So I'd just pass the ball right over to you, Fred, okay?
So, first of all, I want to say thanks for having me. There's nothing that I enjoy more. Investors are such an important part of this world, and I understand why that is, because you all need money to build your companies, and without money, you can't, you know, be successful. And so, therefore, people such as me become important. But really, in my mind, the most important thing in the whole world of startup is entrepreneurs, because without entrepreneurs, there's nothing to invest in. And entrepreneurs are the ones who come up with the ideas, and entrepreneurs are the ones who put the teams together, and entrepreneurs are the ones who give up their good-paying jobs and, you know, figure out how to, you know, live on, you know, very modest means so that they can go and create this company that they're building. So I have a deep and abiding feeling for entrepreneurs, and there's nothing that I like to do more than to speak to and with entrepreneurs. And so I am thrilled to be able to, I guess, be beamed across the Atlantic Ocean into Milan to have an opportunity to talk to all of you. So thank you for that. The thing that goes on here in the States that doesn't go on as much in other parts of the world, and what needs to change, is that there is a very active and important group of investors called angel investors. They often call them business angels in Europe. I'm not entirely sure why they call them that, but in the U.S. they're called angels. And the and a lot of these angels are people who have been entrepreneurs in the past and have made a bunch of money. Some of them are people who actually weren't entrepreneurs themselves, but worked inside companies that were created by entrepreneurs that had successes. And so most of the angels in the United States are people who have been financially successful because of being part of the startup world. And there's a culture of giving back. And it's not philanthropy, it's not charity, it's I made all this money, what am I going to do with it? Am I going to stick it in a bank? Am I going to buy stocks or bonds? Or am I going to invest in a startup? And here in the States, the culture is to invest in a startup and essentially to recycle the capital back. And so when I first started doing venture capital in New York in the 80s, there was no angel community whatsoever. And that makes sense because there wasn't any startup community. And so there weren't the entrepreneurs who had the successes, and there weren't the employees who went along for the ride and had the successes to become the angel investors. You would think in New York, where you have Wall Street and you have Madison Avenue, the advertising business, and you have the big media companies, Time Warner and News Corp and all these things and all this wealth, you would think, and real estates, big real estate families, you would think that there would be angel money. There wasn't. Fast forward to the mid-90s when the internet hit, all of a sudden a bunch of people decided to create internet companies, most of which failed, but at least a dozen or 2 dozen or 3 dozen of them ended up being successful. And we had our first wave of successful startups in New York. And almost every single one of those founders of those companies today is an active angel investor in New York. And not only that, but also many of their early employees who made a lot of money are also active angels. Today in New York, we have hundreds of angels who write $25,000 checks, $50,000 checks in a syndicate of $250,000 or $500,000 that gives people their first money to go start their company. So that to me is the single most important thing that has to happen. It had to happen in New York. I mean, it's been happening in Silicon Valley for 40 years. Most great venture capital firms in Silicon Valley were started by former entrepreneurs. Kleiner Perkins, which many people know, is a very well-known venture firm. Gene Kleiner and Tom Perkins, the founders of that firm, were entrepreneurs. They stopped being entrepreneurs at some point in their life and became venture capitalists, and that's very common in Silicon Valley. It's starting to happen in New York, and I'm very confident it'll happen everywhere in the world in time. But it takes a while for people to, build these startup communities, startup hubs, and it'll take in Italy and it'll take time in Milan. Long answer to a short question.
Basically, there aren't many entrepreneurs in Milan who have exits, and therefore it's going to take a while to build up a proper and deep angel network in Italy, basically. Yeah?
Obviously, if you can get U.S. investors interested in what's going on in Milan, that would be great. If you can get European investors interested in what's going on in Milan, that would be great. There are some programs. I'm sure you're all familiar with Seed Camp, which is a London-based incubator accelerator program that has mini seed camps all around Europe and increasingly around the world, getting them to do a seed camp in Milan. I don't know, maybe they've already done it, or if not, getting them to do it could be good. We invested in a company in Ljubljana in Slovenia, which is not far from Italy. I guess it's a neighboring country. Because of Seed Camp. We were in London, we met the company in London, then we went to Ljubljana, we made the investment. That's a company called Zamanta. So that's one thing you can do, there are some pan-European venture capitalists. Unfortunately, there aren't many, but getting them to come to Milan is obviously important. And then getting U.S. investors to think about coming to Milan is also important. And those things can happen. But I don't think you can count on them happening, and you can't count on them happening consistently week after week, month after month. Eventually, you're going to have to build it yourself, and I don't think there's any way to avoid that. There's a good opportunity to plug a book that a friend of mine has written. His name is Brad Feld. Some of you may know of Brad. He's, like me, a fairly prolific writer and blogger about venture capital. His blog is Feld, Feld.com. He just wrote a book. It's available on Amazon.com called Startup Communities. And it's all about this. It's about what happened in Boulder, Colorado over the past 15 years and all the things that they did to make Boulder become a vibrant startup hub. And I would highly recommend those of you who want to do this in Milan to read it. And there's some great lessons in there, and I think a lot of them which you can copy.
And what about seed or angel investors asking for 100-page business plans? I mean, how would that go down in the States?
That's not what people care about in the States. I think this is something that is very important culturally that needs to change around the world. It's not about, in my opinion, the business plan. I think going through the exercise of creating a business plan is helpful to you as the entrepreneur. I don't think it's particularly helpful to me as the investor. So I think it's worth doing because it'll force you to think through some of the decisions that you need to make in terms of what is the scope of the initial version of the product that you bring to market? How are you going to get it to market? How big does your team need to be? How much money do you need to raise? But in the States, investors don't read business plans. In the States, what investors do is they take meetings, they listen to people's ideas, and ideally what they see is some evidence of the product that they are building. So the more technical you are and the more you are capable of building something, prototype, a wireframe, a half-built product, an alpha version of your product by yourself, the better off you would be in the States, because that's what investors such as myself want to see. They want to see who you are, what is your idea, and what have you built. Not can you write a 100-page business plan with 30 spreadsheets and beautiful pictures, because there is no correlation. I've been doing venture capital for 25 years. There is no correlation between how well you can write a business plan and how good of a business you can build. It just doesn't exist. And I think investors need to understand that in other parts of the world. The process needs to become more agile, it needs to become more iterative, and it needs to become more real-time. And so, you know, I'm sure you're all nodding your heads and saying, boy, we need more investors like who think that way here. And you know, I think the more that your investor community are people who've been in startups and been in businesses, the better off you're going to be.
I would like to listen from you. What is the biggest difference from investor in US and in Europe, from your point of view? Which is the most biggest difference you can see from your seat? Thank you.
I hope that the people that I have co-invested with in Europe aren't listening, because they're going to be a little offended by what I have to say. But we have co-invested with a number of European investors over the years. And the thing that I've observed is that the tolerance for risk and the comfort with risk and the willingness to fail is just not existent in the European investor mindset. And I've sat in many board meetings with European investors when the company wants to do something ambitious and controversial and potentially damaging if they're not successful. And the European investor sits there and wrings their hands and says, I don't know about this, and puts up obstacles like we need to spend 2 months studying this and have more meetings to discuss this. And that doesn't happen in the United States. People in the United States understand, investors in the United States understand that you need to take big risks to get big returns. And the way we manage that risk in the United States is that we make a large number of investments. Our firm has 50 investments. The average fund that we make has 20 investments. So we are willing to see companies fail. And, you know, probably out of 20 investments we make, somewhere between 5 and 10 of those companies will fail. But in return, we expect that the entrepreneur is going to take big risks and try to achieve great things. And we're comfortable with that. And we don't mind losing money, because we know that that's part of what we have to be able to accept. And so that's the big difference that I find with the European investors. They just don't seem to be willing to take those kinds of risks and make decisions kind of out of gut instinct and just go for it. And that, unfortunately, is how I see it.
Fred, just on that basis, the basis of your answer there, what do you have a fear now to invest in European startups? Is that, I mean, how has that affected your strategy for European startups going forward?
No, we don't have a fear of investing in European startups. We think that there are great entrepreneurs everywhere in the world, and the reality is we can get to Europe as easily as we can get to San Francisco. So we have, I think, somewhere between 6 and 8 startups that we funded that were started in Europe, places like Ljubljana and Dusseldorf, Germany, and Berlin, Germany, and London, England, and Eindhoven in the Netherlands. Many of these companies ultimately decide to relocate some of their team to the United States, but also keep some of their team in the city that they were started in. We don't demand that, or we don't encourage that necessarily, but it happens because oftentimes the United States is their largest market, where most of their customers are, and so that's why they do it. But that wasn't the question you asked. The question you asked is, does the fact that European investors are so risk averse get in the way of us making investments? And the answer to that is no. There are a few good European investors, more and more every day. And we're starting to learn who those people are, and we're starting to do more investments with them. And we're also willing to walk away from an investment where we think that the existing investors are just not going to be compatible with the way that we would want the company to operate, which is a shame for the entrepreneur. But we've had a couple of situations where we've really struggled with the investor syndicate, and we don't want to have to do that. So it's not that we wouldn't make investments in Europe, but we certainly recognize the issue more now than we did 3 or 4 or 5 years ago, and are more sensitive to it.
I usually do communications not only for startups, and the problem is how to prioritize the content, which is the most sensitive topic in a presentation to an investor, in your experience.
So I'm going to tell you what I want, not what other people want, because every investor is a little bit different. What I want someone to do is I want them to walk me up the mountain and show me the promised land on the other side. So I want them to tell me what this thing that they're building is going to be, and why, when that is what it is, that's going to be an amazing thing. And then I want to tell me where they're starting the walk up the mountain and why that's the right place to start. Because I know that you can't build the entire business overnight. And everybody who tries to do that fails. The biggest mistake entrepreneurs make is they try to bite off too much in the first version of the product that they create. My partner Brad talks about the narrow point of the wedge. So if you think about, if you wanted to bang a piece of wood into a wall, if it was a wedge, you might be able to do it, but if it was a brick, you couldn't, right? So what entrepreneurs need to do is they need to find that narrow point of the wedge, and they need to bang that into the market, and then from there drive the entire wedge through. And that's that's walking someone up the mountain, right? Which is I'm starting here. This is only going to take me 3 months to build, and I get in the market, and I can get 50,000 or 100,000 people paying me for this. But once I get that, I can then do this, and I can do this, and I can do this, and in 10 years, I'm going to have this. And that's going to be amazing, and this is why. That's what I want to hear.
I was studying in Silicon Valley for 3 months, and I was developing my thesis project on dual companies. So the Italian companies that were developing both markets, so Italy and US. And a lot of them moved a part of their company to the US, and one of the problem was that looking for investment was that the IP was in the Italian company. So the problem for the US investors was that all the knowledge and the know-how was in the people in Italy. So this was a big problem for them to invest in these companies. What do you think about this?
So, it depends a lot on industry.
Mm-hmm.
There are industries such as healthcare and life sciences, or clean tech, energy technology, where the intellectual property, the patents, and the know-how is really a large part of the value that an entrepreneur is selling to investors. And I think in those kinds of companies, you will run into those problems, but I'm not sure why you couldn't create a U.S. corporation that had a subsidiary corporation based in Italy which owned the IP. Like, I think that there are legal structures that could be created to solve the IP issues. But in the technology industry, I think investors, at least in the States, are starting to realize that the intellectual property is a fleeting asset and that it is very hard to defend intellectual property in information technology because the technologies are changing so quickly. If the engineering team is in Milan and they are employees of the company that I'm investing in, I'm okay with that. This hasn't been an issue for any of the companies we've invested in Europe. And it hasn't been, not only has it not been an issue for us, it's not been an issue for a number of other companies. But again, we're investing in software-based businesses, not businesses like life sciences and energy. So it may be different in those markets. But I think that that's not as big of a problem, and it's solvable, and it shouldn't be an impediment, in my opinion.
Hello, Fred. Just your impression on to what extent you think advisors can help this process of meeting the expectation of the investors and the founders of startups for a successful joint ventures. We heard about intellectual property issues, employment issues, risk-adverse questions. So I'm just wondering, what's your idea to what extent advisor can help this process? And I must say that I'm a little bit biased here because I'm a business lawyer and I advise both founders and venture capitalists and business angels in these processes.
There needs to be more people like you, because whether it's a lawyer or just a local businessman or woman or somebody who's done it before, who's now making angel investments, anybody who can sit between the entrepreneur and the sources of capital and help, help the entrepreneur convince the investor to invest, who can whisper in the ear and say, hey, this person's really very talented. You need to take the meeting, and because it's so hard for the entrepreneur to convince the investor to do what they want them to do. And anybody who can bring additional credibility and relationships on behalf of the entrepreneur is absolutely critical. And so one thing that I would really strongly advise every entrepreneur in the room is go find 3 or 4 people who know a lot about startups and bring them into your company as advisors, and maybe even give them a little teeny bit of equity, not a lot of equity, so that they're vested in your success, and then ask them to help you raise money and do the things that you need to be successful. So I think what you're doing and what other people are doing is really, really important.
Okay, here I am, Fred. Actually, that was the second to last question, because I'd like to close, if I may, with a very, very quick question. You and your wife, Joanne, do make some seed investments, yes?
She makes the seed investments. So the way that we create, a proper balance is that everything I do is done through Union Square Ventures, and anything that we do personally with our own capital, my wife does.
Okay, so, and I'm talking about the seed stage here, not at the VC level. If someone held a gun to your head, what would you choose, product or team?
I'd say product, because product is a reflection of the team, and team is not a reflection of the product. So I would choose product over team.
Excellent. Okay, Fred, I think we can wind it up now. We've managed to keep on time. Just by the way, we were trying to guess, is this the first time you've done an international video conf with startuppers?
It probably is, and it won't be the last, because this is fantastic. I feel like, Captain Kirk on Star Trek Enterprise. He gets him a lot
Excellent. Fred from Milan, a very big thank you. Grazie and arrivederci. We'll see you on your blog, okay?
Thank you. Bye, everybody.
Bye, Fred.